Hey everybody, Martin Mazur. Good morning, March 5th, 2016. Just a quick look at the charts this morning. Yesterday, I believe it was, or day before, I think it was yesterday, I showed you this upward sloping wedge pattern. It was capturing these higher lows and then these highs that appeared to be flattening out. Well, after yesterday, I got to move the upward level of resistance even a little higher. The day before it was right here. So that creates a steepening line here, which calls into question the wedge pattern, although it's still there. As I said the other day, the technician's textbook, if there were such a thing, would tell you that this is kind of a bearish near-term signal, that shows momentum beginning to peter out a little bit to the upside, and we could see us break out to lower below that wedge. That tends to be what happens, but nothing happens every time, of course, folks. And if that were to happen, if we were to rise up to here, of course, we'd close this gap that I promised you we would one day close. And then we could run into some resistance and come back down and maybe test again the 62% retracement level, which we rose through. It was resistance, then it was support, then we shot higher. And so somewhere, if we do see the market roll over a bit, then we'll be talking about support levels at some point going forward. I want to stretch it out just a little bit and take you back on the 1-year chart to the recent all-time high, which was last May, all-time high for stocks. And we draw our retracements down from there to the recent low, and suddenly we see that the market bumped right up against this key level in the Fibonacci retracement grid, if you will, of 62%, and just came right up virtually to it and then bounced right back down. So I can tell you folks that technicians are going to be looking at that as more resistance as the market tries to fight its way higher. If it can shoot through that measurably, then that could be a key support level. But again, we have this rising wedge pattern to contend with. The market is nicely above the 50-day moving average. That's a strong sign. As I said in the written commentary, the breadth in terms of sectors above 50-day moving averages, that also is a very strong technical sign. A lot going on in the world, as I suggested. A lot can go wrong, more can go right, but I think economic risk, as I suggested, it would be to the upside. Market risk, I'm going to say, is fairly evenly weighted in the long term. I'm sorry, not in the long term, in the short term. In the long term, I definitely want us staying in the market, which means we're going to have to ride through the ups and downs along the way. Thanks, folks, as always, for watching, reading, and listening, and hope you have a great weekend. Bye-bye.